Happy Friday, Pat. Are you surviving the 117-degree weather?
Yep, I am. I can't complain. It's better than 10 below in Chicago or Wisconsin. That's all I can say.
I had to hose down my sidewalk this morning for a moment, and I couldn't believe how quick it dried up. It's like wet and just
Yep. Oh well, we're here. This is our winter, but I mean, like I said, I'd take this over 10, 20 below any day of the week. Hope everybody's doing all right out there. Drink your water. So
yeah, you got to keep this stuff really close. The one thing I remember when I lived in the Northeast in the wintertime is I hated pumping gas because you're just standing out there. You got to put on a coat, you got to put on a stocking hat, put on your gloves and go out and pump gas, and you try to get back in the car and leave. But you can't leave the car running. So I always have my gas gauge like right there. Right there. So
I think that's why Phoenix has become popular, because I think people are starting to realize that one thing that I always tell people, it's not 115 degrees all day long, 24/7. It's 115 from about noon to about 7. Mornings are beautiful from 5 to 9, 9:30. You got 4.5 hours there, and then at night you got 7, 7:30, 8. It starts cooling off. So you only got about 6 to 8 hours of 6 to 7 hours of really intense heat, versus up in Wisconsin when it's 10 below. It's 10 below all day long.
Yeah.
So I'll take this heat any day of the week.
So my brother saw an interesting sign on a business in the town that he lives at, and it said, "Weekly stimulus checks passed out here. Come inside to apply." I thought that was great. So, hey, we've got some, the tide is turning, Pat. We have 5,862 listings right now. We normally on Fridays, we've been coming in around 52, 53. We're almost, we might even break 6,000. Let me see where we're at right now while I got everybody here. They've been coming on all day. But remember, I said I thought 7,000 might be kind of a breakout point.
Mm-hmm.
So, we're getting closer. So it's interesting. But I'm going to show you what it means on my 7-day moving average. And then, we're 58.68 right now. So we went up by 6 this past hour. And on the 7-day moving average, what we have is 4,168 new homes came on the market, of which only 3,760 went under contract. And when I look at these numbers, that's the number that's moving. I don't see on my internal stuff on the MLS where we're getting more listings. So I went and did some searches on the Cromford report, and I'm going to show you. But, our gap is, still about, 300 to 400 a week. The big difference that I see on my numbers is the pending number is dropping. So the pending number, if I unhide a couple columns here, so this is pending, the second to the last here, and you can see way up here it's like 2547, 2617, 2700, and now we're down to 23. Under contract with backups is kind of relatively the same. It's down by about 100, and then contingencies are still in the basement, around 70 or 80. But the pending number has dropped. So I went over to Cromford report, and I found this, and this is interesting to me. It's a real eye chart, but this is 2021, and it says new listings that came on as of June 13th. So it says Monday 324, or that's Tuesday, Wednesday 350, Thursday 469, Friday 489, Saturday 173, and then it starts over again on Monday 269, 266. So I think they do like a rolling total for the month, and then it resets, and they're comparing it to last year. So when I look at this chart, we are higher in the past 2 weeks than the past 2 years. So we're at 3540 for a running total right now versus 3294 and 3178. So the number of homes that are on the market near here is just a direct result of those two numbers changing. Listings are coming on faster, but it's tiny. And pending sales are dropping enough to where that gap's now 400 to 500 units a week. And at that rate, that gives us more hope that we're getting back to normal. When you go down to 2006, look at this. We were bringing on twice that amount of homes as a running rate. 6,062.
So those listings.
Yeah, those were listings coming on. In 2007, 5,338. And then during the crash, 4,950. So listings were still coming on pretty good during this period. It really dropped in 2013, 2014, as far as new listings coming up. But there was already an ample supply of homes out there.
Yeah.
So that kept adding to the supply. So this is just showing the new stuff that shows up. It's not showing the current inventory. So I thought that one was kind of interesting.
Did you just find that chart?
Yeah, you get over here in a Cromford report and you can chart stuff in that, So I thought,
yeah.
well, where can I find that? Here's our annual appreciation. 38.3%. Can you believe that?
God.
I mean, and it's still going up. Article here at Financial Advisor says tight U.S. housing market uncoils with sellers ready to cash out. So they're basically saying that sellers are ready now to take advantage of these high prices and sell. I'm not seeing a lot of that yet. I may, there's a tiny bit in that number we just shared with you, but the pending sales, I think, is having a bigger impact than the new listings coming on. But yeah, I've only got so much access to data. Cody says, I just got outbid $70K over list in Surprise with waived appraisal contingency. It's slowly going down, but not fast enough. Yeah, it's not noticeable out there in the street, is it, Cody? I mean,
I just talked to another realtor. I just got off the phone with this guy I pre-qualified the other day. He was buying a house down in Chandler, like Riggs and McQueen. House listed for $297,000. It was 1,056 square feet. It was honestly, it was just it wasn't anything special.
No.
It listed for $297. It went for $387.
That's ridiculous.
I mean, It's just, what I'm starting to see is it's really, it's asinine. I'm sorry, but it's just, and I think, if I was a buyer, I got my buddy out looking, and it was a house $400,000, and basically just, it was like there's no yard. There was no yard whatsoever. It was like about 1,500 square feet up in 35th Street in like Bell area, but just he's like, nah, he just pulled out. He says, you know what, it's just not, the house isn't big enough. But this one that was listed for $297 went for $387. It was kind of a track home. But I think I'm seeing, it's what's funny is some homes, it just hit it to me. I don't, correct me if I'm wrong, but I see it hit and miss. Some homes go for 5,000 over list. It just, if you pick up the wrong house at the wrong time, you're going to get in a bidding war.
You know what I think an opportunity is that people are going to miss though, and that is commercial real estate. Because it's getting hammered, right? It's just getting slaughtered. And it's the bad stuff, and you don't want to touch it. That's blood in the streets. Maybe you ought to, kind of take a look at some small commercial buildings that you can pick up, because there's, and there's some repurposing ideas and things that you can do in commercial real estate that are unique. You've got to be creative, but there's some bargains out there. Evidently, Gustavo looked that one up. $387,000. Oh. Where is that one? Is that where you're talking about the same house, Gustavo? So commercial real estate, there's opportunities. I saw one guy talking about how he bought this large kind of warehouse building that was sitting empty, that used to had a company that sold lights, and he's going to have concerts in there. because he says people are coming out, they want to go hear live music, and he says I'm going to make it happen. So he's repurposing the building, and so that's kind of interesting. So this week, Pat, in rates, let's wind back the clock here and see what you said last week. Are you ready?
Okay.
So
let's see.
Okay.
So you can see there's consolidation.
Oh,
Congress has passed a new
we have an
bill allowing
ad.
homeowners
Please
to
hold.
claim $3,627.
Damn ads.
there we go. And then when you come out of
I'll
it,
go 2 years. So you can see in here, there's,
so,
I mean, rates.
so it could go either.
This is
So it could
obviously,
pop out and go either direction then.
yeah, it looks like it's consolidating right in here. My gut feeling is that we've been seeing rates in the high twos with inflationary numbers. I think this chart is going to go down because that's when bond prices go down, rates go up. And this is, I just don't see the news where rates are going to go down further. It's been kind of consolidating. When it consolidates like this, and maybe I can use this as kind of a prediction and see if I'm right the next week or two, but the Feds, next week, the Feds are meeting with their dot. They got a meeting that they connect the dots to see where their inflation numbers are going to, their target rates. They have this little dot matrix that they have.
Yeah.
That's coming out next week. The Feds are, the Fed minutes are coming out. And I'd be a betting man that we're going to see some, I'll like to come back next Friday and see if I'm right, but I think we're going to see rates kind of get a little active.
Well,
Yeah.
were you right?
Let me see here. Can I share my screen?
You put it up there. I'll put it up. So. I may have an extra $5K to put towards my home purchase. Should I A, put it towards appraisal, B, up my down payment 5%, or C, keep everything as it is and use it for closing costs?
Up my down payment to, put it towards, well, the appraisal is going to be about $550.
So I think you're talking about an appraisal gap.
Oh, is that? Oh, okay. Put it towards the appraisal. Probably toward the appraisal. Yeah, because your down payment, your payment's not going to change that much by putting that that money. Well, let's see here, up my down payment to 5%. It might make a difference on your mortgage insurance. You have to take a look at that. If that bumps you from like a 3% to 5%, I don't know what kind of loan program he's in, so they probably need a little bit more detail. But typically, putting more money down on a house doesn't change your payment. I don't know if change your payment that much. Keep everything, use it for closing costs. Yeah, it's
So you were saying here.
Yep, let's see here, right here. So here's where it was, and this is what happened right here. Rates went up. This basically means rates went up. It was definitely a crappy day in the market.
It's interesting too, because the Fed didn't change anything. They just said that they were looking at the inflation numbers and that they're going to watch them more closely, and they think that inflation may be around longer than they thought, but they're not sure. Basically, they're just saying, yeah, we're just going to watch it more closely. None of the fundamentals changed. They didn't pull back on any of their mortgage-backed security purchases. So that shows you how edgy the market is.
Yeah, that right there, that one little day, this day right here, it was about down about 59 basis points, 60. So it changed rates by about 1/8. They came down a little bit here. They've come back. They pulled back a little bit. They did have kind of a nutty day on Wednesday. And the thing of it is, they basically said that they're in 2024, they see inflation igniting a little bit more. That they're going to have to eventually raise rates. So they said nothing, but the market reacted. So I think the market is trying to get ahead of this tapering. I think the market's seeking a reason to raise their rates, but they just, the market's saying, hey, we want rates to be higher. And the Fed, obviously, from a verbal standpoint, are keeping rates low. But I think most of people behind the scenes want to see rates higher, but they don't want to see a rate go from 3 up to 4, 4.5, or 5, because then it'll put a stop on. It'll put a cringe on the real estate market. I mean, I don't think it's not going to make it a crash. I mean, people, once again, they go from this market of going up to like, oh, we're going to crash. we're not going to go from this to this with this type of market.
Don't you think the Fed at one point is going to come in and say, this is getting way too overheated, we may need to make some changes?
Well, they'll make change. They'll start buying. What they'll start doing is they'll pull back on their MBS. They buy treasuries and they buy MBS, mortgage-backed securities. Those are two separate things. Now, treasuries do track, or mortgage-backed securities do track treasuries. It's kind of parallel,
Yeah.
It's not all the time, because sometimes you see treasuries diverge. Like we said last March and April, where the MBS was underperforming treasuries. It's kind of a weird market, but they can stop their buying on MBS and still buy treasuries. So the treasury note is doing well, but they could say, hey, we're not going to buy any more MBS, mortgage-backed security, and then the mortgage rates will go up. That's where you see.
I think they're going to have to do that sooner rather than later.
Yeah.
Which I mean, because we can't continue to stay this overheated, but I don't see it rolling into a huge crash. I would like to see our appreciation roll back down to 4% instead of, what did I say here, 38.3.
Yeah.
I'd really like to see that.
It's you're getting some home. It's just, like I said, I see a pull. I mean, when we say a pullback, things are still going to go up, but at a decreasing pace. Not the accelerated pace that we're seeing. I mean, it's just, if I was a buyer, like I said, not to be negative, Debbie Downer, but it is tough. You got to be persistent. I think there's still opportunity out there. It's just, you got to just keep pounding away. And I think you're going to see this heat. Maybe some people get a little, they're discouraged with this heat, 117 degrees, getting in and out of car. Maybe you got some people say, I'm just, we're going to sit this out for a bit.
It could be, and it's nationally though. It's the numbers are showing the same, that that listings are increasing. People are starting to sell. I tracked this little spot here in Ocotillo, like where I used to live, and at one point we got down there where there were only 5 homes for sale in this neighborhood. Now normally there's 80, and today there's 12.
Yeah.
But every day there's a new one that comes on and drops off. So I mean, this one's just came on. Just a couple hours ago for $499, and it's only 1,750 square feet. Here's one here on Barbary Lane, which is 600,000, and it's only 1,900 square feet. So, the ones that are coming on now are much, much higher. Nice $1 million home. Here's a new one on Yosemite for $875, and it is 3,100 square feet. That's not bad. But I think what you're seeing is people that were holding off. They are starting to show up, but just not in great numbers.
Mm-hmm. Yeah.
And there's no such thing as seasonality anymore.
No.
So now there's nothing coming down the pike next week, is there, as far as big financial news?
No, nothing. I think there's going to be digesting of this, the Fed, still. I mean, they're probably, I think they're resetting. The mortgage market's going to reset a little bit. Based on this news, they said there was the bond market is in midst of repricing, but that's not the kind you're used to. It basically, just trying to get reset or what's going on in the next 6 to 12 months. Because, with this inflation news, I think rates are, there's more inflation out there than people can really see.
In market stats on the MLS that I pull up, it's not very revealing, because it kind of, this is May, for the month of May, the absorption rate. Here's our inventory. It's a bit of an eye chart. The red line is active listings, and there's new listings and sold listings. So new listings are, I wish they would have made it bright yellow, but I think new listings are this top line right here.
Mm-hmm.
So there's active and there's new. Prices going up, sales to original list price, between 102% and 103%, and then the dollar volume. But that the MLS doesn't give me as much data as I find that I can get out of the Cromford report, because they get in and do all the analysis, and I respect their historical accuracy, for lack of a better terms. So,
I jump in real quick though. I saw, this one post by a buddy of mine is a mortgage, a guy I used to work with. And I read these mortgage posts in this Facebook, and he was saying that I wish I could pull this up here, but he ran into a situation where he ran into a realtor that said, he was representing the buyer, and let's see here if I could pull this up. Yeah. I just spoke to a listing agent that refuses to entertain any offers unless they are cash, and they're doing it on every listing. And he goes on to say, I cannot wait till the dust settles on this mess. Some of these agents are going to be applying for their old job at Great Clips, But I mean, these, a lot of these, it's something just like you said, I can look at all the charts and all that. And you can look at my feeling is you can look at charts, but I try to gather up just as much emotional, what the mental aspect, talking to people, reading stuff, what they're getting cocky. Because every time, once again, I go back to my old, theory that once people start getting really cocky, there's something behind the scenes that, excuse my French, but bitch slaps people back into reality.
Well, I got a seller's agent that's calling me every day because we're waiting for the appraisal, and the appraisal got delayed for a silly reason, and we're supposed to close next Wednesday, and we don't have the appraisal in today. And he said his seller is freaking out, and I said, we were told that they're going to be there today or Monday. That's what we're told. And he said, well, I haven't heard from anybody yet. And I said, well, there's nothing I can do about it. If you guys want to cancel the contract, you'll have to wait till after Tuesday by not signing an extension. But then you're going to be back to waiting 30 to 45 days to sell the house. Mm-hmm. So the worst case scenario is we may have to delay closing by 1, maybe 2 days. That's it. And it'll still be under 32 days. So it's like, I just kind of, if I say, why are you so wound up?
Well, that's the problem. There's a lot of agents that got in this. Bottom line is there's a lot of agents and mortgage people that got in this business the last 3 to 4 or 5 years. And I, everybody wants to make money. I get it. But especially, if you've been in business 1 or 2 years, I don't know. They're not seasoned. They're not seasoned. And I see a lot of, which is kind of a lot of crap. There's a couple of questions. Let's see here. With big money coming in, paying $100,000, how do you affect? What do you?
I just want to know what's going to have effect on taxes. When the new assessments come in, taxes will go up. There's no doubt. That's one of the byproducts of real estate going up. In North Phoenix, in one community, someone put a 4-bedroom house for sale at $630K price, but in the same community, 4-bedroom house sold in $465 on March 25th. Why is there a huge difference? Price only 3 months past. So basically saying same house, apples to apples. One went almost 500,000, the other went 630. We said a while back that May and June numbers were going to shock people, and that's exactly what you're seeing. April and May was a straight direct trajectory straight up, and obviously there was an appraisal involved in there, and he probably grossly overpaid for the house. We have Topeka Drive, Glendale. It seems excessively expensive, $509K, but hey, at least inventory is slightly rising. Happy Friday. Yeah, Devin, I don't know. I'd have to pull it up and do a deep dive and take a look, and I wouldn't want to. I don't even know what it looks like. It may be excessively high, but it's going to be a few months before this all shakes out. And I'm pleased, though, at the rate that I'm seeing the difference between new listings and contracts. That is giving me hope that by, I'm going to say maybe September, this tamps down a little bit if this current rate continues.
Yeah. Like you said, it doesn't mean that the market prices are going to come down, but I just think what I'm tired of is seeing the excessiveness, I mean, people bidding 80, 50, 60,000, 100,000 over, it's just, I wish I had a solution. It's frustrating,
Yeah, it really is tough for first-time home buyers, but something will change. It just, but it may take, I said before, this may be the lost generation when it comes to, home ownership, thanks to things like student debt and lack of building.
Yeah.
So builders are trying to catch up. I was down in Maricopa yesterday. There's a ton of building going down in there. Unbelievable. But the resale homes are selling quickly, and there's not that many available. So same story repeated every city. So
yeah, what's frustrating though on my end is I'm seeing, like this agent said, we're just taking cash offers. They're not looking at VA. These VA veterans are getting hosed. First time FHA. I'm
there's risk in cash buyers too.
It's almost getting discriminatory because you got to present as a real estate agent. Don't you have to present all offers?
You have, yeah. You are. Well, you have a fiduciary duty for your seller, and your fiduciary duty is that you are supposed to present all offers. But at the same time, if you've put something on the market and the seller says, "I only want to look at cash," you have to do that.
Yeah.
So you have to say, "Okay, I've got 4 cash. Do you want to see the others?" No. And the people that are saying they just want cash, they're also not realizing the risk in cash. There's a lot of cash offers that get canceled on the inspection, and they didn't even pay for the inspection. They didn't see your house. They didn't see the neighborhood. They offered you this big cash price. You pulled it off the market. 3 days later, they pulled in their driveway and go, "Nah, I don't think I'll take it." And they can cancel your contract. Didn't cost them a dime. They take their cash, go put it on another house, and you can get steamrolled like that a couple times. Whereas somebody that
people realize is that's what these these agents sometimes, it's like, they think cash is king. Well, they get their head out of their butt. I'm getting a little frustrated sometimes this week. It just, I feel bad because you can tell my Irish is coming out. But when you go for financing, you sent me 2 months bank statements, 30 days pay stubs, your IDs, your tax returns, your this, that. You send me 12 to 15, 16 bits and pieces of information. People are serious. They, when they're pre-qualified, they're serious. Like you said, that's what these agents got to realize. That cash offer, like, I'm just gonna pull that out. They don't have any skin in the game from a qualifying standpoint.
No. And here's a question: what's the difference between pending and contingent in this market? Is there any benefit to following up with a listing agent if a buyer changes their mind? Like Pat's example, saying it's too small. Pending is when a house goes up for sale and they get an offer and they've accepted the contract and they're saying this thing's pending, it's going to close. We're not accepting any backup offers. Contingent means that somebody gave you an offer on the house contingent upon the sale of their other house. And there's not a whole lot of that going on right now. In fact, those are really hard to get accepted because we have to wait for that house to close before the house that we're selling can close. Then the other one's called UCB, which is under contract accepting backups. So UCB and pending, UCB used to always be a bigger number, but the market's so hot now that people are saying, just listed it pending. I don't want anybody else coming in and looking at the house. So
there was that question about any benefit to following up with the listing agent if a buyer changes their mind, like Pat's example of saying it was small. I'm not sure. Yeah, I mean,
following up with the listing agent. Yeah. I mean, just tell your agent, hey, watch this one closely and have him call the agent and say, hey, if this thing falls out, let me know.
Oh yeah. Yeah.
That's a conversation that needs to be had.
Yeah. You could there's some benefit there. That's for sure.
Just saw on CNBC yesterday that Taylor Morrison is building for rent single family communities only in many places across Phoenix now. Yes. Yeah. They're building them. Big complexes, and usually they're selling the whole thing to somebody else. investors and Wall Street, and they're just using them as rentals. They're little rental communities for people that want yards. How long that's going to be a trend, I don't know. I don't think there's anything wrong with it, because we also have a rental shortage and people are tired of renting apartments. And these are kind of neat looking little communities. You've got a front porch, you've got a backyard. It's kind of nice. So, we'll see. You said there was a buyer who backed out of a house because they said it was too small.
Yeah. So, I mean, that's a house that's back on the market,
Is earnest money not required in cash offer? Yes, it is required. But remember, there's always that inspection period. So you have a 10-day inspection period. Usually the big cash offers shrink it to 5. And anytime during that inspection period, you can back out of the contract. You can say, I don't like it. Example I give is you got this house, you really like it, and then you pull up and you even before you hire the inspector to go look at everything, you find out the neighbor's got this incessant barking dog that's constant, or something else about the neighborhood you see that you don't like. You can back out. You can go, you know what? There's too much activity in that house. I don't like it.
Well, so the dog you can take care of pretty quickly.
Yes, you can just tell them to be quiet. But I also tell people, if you pull up and your neighbor is walking around naked and you don't like that, then you can get out of the contract. Or if you do like it, you can ask to close earlier. I showed a house in Central Phoenix once, and I'm in the back, and I'm going, and this guy's, he's talking about maybe he wants to list it and stuff. And I'm looking around and I go, man, that's a tall fence. And he goes, yeah, we're nudists. Oh, okay. Well, that explains the tall fence. So, I didn't list it. I don't know. I think I would. Yeah, I didn't list it. So, well, everybody, I'm going to wish you a safe weekend. Be careful out there and drink this stuff before you get thirsty, because you're going to get a headache. You can get muscle cramps. They can get dangerous out there, and be very, very cognizant of taking water with you.
Have a good weekend. I think just on the bottom line is rates. I mean, I think we'll see what happens, but I think they've stabilized here, but if anybody's looking for lower rates, I don't think we're going to see it. Maybe.
And I wanted to give you some good news today that the United States lifted the 25% tariff on Irish whiskey, single malt Scotch.
Oh, good. Oh, hey, that's good news. I appreciate that. I want to end up. This is not just a point that just really ticked me off. Okay, Biden signed this June 19th, right? My question is, how many real estate deals got screwed up here in the last 24 hours? Because June 19th, tomorrow, cannot be used as a rescission day for CDs, closing disclosures.
Did it go into effect that fast?
Yeah, I mean, he declared it. I'm getting updates from lenders saying the 19th was not as a federal holiday. We cannot use that as a rescission period. I bet you there's a number of pissed off people right now because they can't close on Monday or Tuesday. Or
and the rescission period. Explain to people what the rescission period is.
Well, with a refinance, I mean, there's 3 days waiting period on the CD, the closing disclosure. Once we get the final numbers on a deal, we issue what's called a closing disclosure CD. We have to, if it's issued, say yesterday, you sign it that day. So Thursday, Friday, Saturday, then you can sign on Monday. But now that it's Saturday, it doesn't count. So you sign it yesterday, Thursday, Friday, Saturday doesn't count. Monday, now you get signed on Tuesday. So there's probably people who've got moving trucks ready to go on Monday or we're going to close and their deals are screwed up. I believe there's probably more than just a handful of deals like that this weekend. So
yeah, and it's unforeseen. It's one of those typical government examples. Like, I mean, you guys are the ones that wrote the 3-day rescission rule. Right. Somebody should have said, "Hey, there might be a problem here if we do this." Have a comment that says, "None of the comments from your live transfers over to the posted video." I believe it does on StreamYard like this. I know when I post live in the morning, I do check that I can have the comments post on replay, but sometimes it does and sometimes it doesn't. I know that on Fridays, I use a service called StreamYard, and on Monday through Thursday, I use OBS software, but I also include in the window a chat window. And so you can see the chat that's up there, but it doesn't show up in the bottom on the chat. It's usually just on the top. Here, if you're seeing it on this screen, then you'll see it on the replay. So, but I appreciate the tip, and anything that gets us more viewers would be fabulous, because we're up to 1 million what now, Pat? Something?
I don't know. It's like McDonald's. It's like McDonald's. You start selling so many hamburgers, you don't know. You can't keep counting.
We're just two guys having fun. So
yeah.
Anyway,
all right, man.
Everybody have a great weekend. See you later.
All right. Have a great weekend. Bye-bye.